Good weekend, all. I'm Epstein of Linn & Associates with your weekend update, and this is for your spiders and ETFs, and this is going to be the weekend edition, which means we look at the weekly charts, not the daily charts. Today is Sunday, and we're now at August 1st. Yeah, it's August 1st. Hard to believe, right? 2021, 6:20 p.m. So we have an interesting week in the sense that you saw a lot of these markets start selling off. You had a mixed bag on Friday, but you're starting off in the futures on a positive note. All of the stock indices are into the green, some nicely in fact. And the question is, what's going on? Well, it's a combination that it looks like they're going to get a vote on infrastructure to proceed this week. If you read the press, it sounds as though there might be passage of it within the Senate. It's got a tough road to hoe yet in the House of Representatives because there's so many interests there. And after that, if this gets done, then there's the bigger bill for the education and taking care of seniors and all. And that's going to be a hard one because they're trying not to get a majority. They're trying to get a majority, a reconciliation bill where you only need 51 votes. So this is going to all hang on Joe Manchin again, and we'll see just what he wants to do. Now, as I said, we're going to look at weekly bar charts. And as you can see, you don't need me to tell you this market's been in a heck of a run to the upside. The market had a correction, made it all up, finished out at 153.40, just under the all-time high close, at least that I can see. When you look at the moving average of closes, the market's over it. So what do we have? The swing line is right here. That's the brown line that goes underneath these lines. I created this indicator 20 some odd years ago. Originally, I did it for my son because I wanted him to be able to look at a chart and tell me on any chart, just look at it, is the trend up or down? And the concept is higher lows, higher highs, that's an uptrend, lower highs, lower lows is a downtrend. Well, you've got the uptrend, and that trend will be broken if you take out 147.37. Then I tell them filter it. Just put a simple 18-day or 18-week, depends on the chart you're using, moving average. If the market's over it, the bias is up. If it's under it, bias down. And while you can have an uptrend, if the bias is down, you have nothing. You have a contra-trend rally is what I call it. Well, you have an uptrend going here. The odds of staying over a Bollinger Band are all of 5% of the time. And that is why you hit it and you back away from it so often. Is there a way to play that? Absolutely. I teach all of this under the word education on our website at www.iraepstein.com. Go look at the education portion. Very easy to learn. Higher lows, higher highs. Applying it requires your discipline because inevitably you're going to say to yourself, oh, this isn't right, this isn't right. Guess what? You're probably wrong. When you're looking at quantitative numbers, more times than not, it's telling you what to do. Does anything work all the time? Nothing. You're looking to be more right than wrong, and when you're wrong, controllable risk, and let the profits, when you're right, take care of that. Plus, you're looking for ways to milk that. When you have what's called an embedded reading in momentum, embedded is this. I can show it back here. Markets normally travel between 80 and 20. 80 in the traditional way being overbought, 20 being oversold. That's the way that George Lane taught it. I changed all that because I think I found a better mousetrap within what his teachings are. I believe 70, anything above 70 is overbought, anything under 30 is oversold. Number two, I found something that I shared with George when he was alive, and he said, I think you're onto something. And I changed some of my math that made this, and then I applied it like you're seeing here, and I said, George, this is called embedded, locked in. I said I could have called it locked in or embedded, I don't know what to call it. And I said, I'm noticing when this occurs and these numbers are over 80 for several days or more, the market tends to keep going, and when you lose that reading, with the red line getting under 79, market goes back to the 18-week average or the 18-day average and reassesses what it wants to be. I showed it to him over and over. He thought I was onto something. That's all I can tell you. The man's not around anymore. But you got higher lows, higher highs. He used to be a friend of mine on one of my TV shows called many years ago, Stocks, Options, and Futures, and it was part of the old Financial News Network, which became CNBC. That's what the NBC bought and created the CN of that show. And I probably had one of the most popular shows at 1 in the afternoon on stocks, options, and futures. And I'd have everybody on. In those days, it was Robert Prechter, as you know, and he dealt with many of the studies that I had, the GAN analysts, John Bollinger on. I had, obviously, George Linn on. I can go on, and I've got signed books from all of them. And I'd show them my theories, and they'd show me theirs, and we'd have lunch and talk about it. I got an education from, I thought, were the best minds of the time. And now I've turned that, and I help myself in terms of trying to teach you what I've learned over the years. And in looking at it, when you hit a Bollinger Band, 5% of the time you'll stay over it. Why would anybody buy against that number? It's beyond me. That's where I think the pros take money off the table. And no, they don't go short there. I know you're going to tell me, oh, but look at it, keeps falling. And I know, but there's times that it doesn't. That is not the concept. You can get caught in this. You get short and it just keeps going on you. There's nothing wrong with that. You're not supposed, maybe you don't catch the whole trade. So what? There's always another trade. Pave. Would you want to be bearish if they're talking of passing all these bills? You can. This guy won't. And the downtrend ended this week when you got back over this number. You came and got back over the 18-week average. You're not in a trend. You have a lower low, higher high. I see resistance at 27.18, and I see this correction phase having ended in the market. In XLI, on the weekly chart, I'm still friendly. The market's over the 18-week average. You have a higher high, lower low. I don't see anything to do on the weekly chart. XLE, been in a downtrend. Now you got yourself into, right over here, the lower Bollinger Band. You hit 46.30, 46.26 is that number. I think it's close enough. And you just say, okay, I think the pros took some money off the table there, and I still do. Resistance is 51.57. You'd have to take out 55.27 to negate the current downtrend. In SPY, up and away. I look for a fast challenge again of the upper Bollinger Band. The high this week was 441.80. The number coming in is 442.46. I wouldn't be surprised if it hits it if the S&Ps hold up as they are right now, and they're up nicely. So you're getting a good run, about 12 handles tonight or more on the S&P as I'm recording this. In the EFA, the emerging markets, so did this downtrend run its course? I think it did. Got to the lower Bollinger Band, bouncing up. If it can take out now all these numbers here, then the upside is 81.70. We've got to keep our eye on interest rates as well to see what they do. Gold is flashing an interim buy signal on the weekly chart. You have an outside week up. I think the pros are going to step in and buy the market on the weekly chart with a stop under this week's low of 167.72. I think they'll cross their fingers and hope that longer term it gets back to the 178.92 level. That is not the case in GDX. You have a lower low, higher high, and you're still under the 18-week average and you're oversold. I don't see buying or selling happening there. In ARC, you've got the pattern of higher lows, higher highs. Even though you've pulled back to the 18-week average, I think you're finding buyers right here. In that, you'd have to take out 113.27 for me to think that, okay, the buyers are wrong and the market could be going back to 104.27. In Amazon, looks heavy. Got up to the Bollinger Band. What are you supposed to do when you get up to that number? Out you go. You never did embed. So I think here is where the pros came out and the market down in a downtrend at this point. If it wants to accelerate, 30.72, let's call it, is the objective. If it wants to just hang around here at the 18-week average is the key number. On interest rates, the higher you go, lower rates are going. Futures are still up tonight, which means real rates are dropping a bit. But I see a tremendous amount of resistance, 151.33 from right here at the 149.52 level. I'd be very careful between the Bollinger Band and that, and you're not embedded, so big problems there. In the euro, the market is showing you it wants to hold the 200-day average. I think the pros that were short got out. Oversold condition into that long-term number that's worked before. It's not reason to go long, in my opinion, but it's also plenty of reason to be out of shorts. Last, DBA, the grains have come alive again. We'll see what this weather means for them. I'm not seeing a lot of heat or rain at this point in the forecast. We'll see what they want to do when they open at 7 tonight. The trend right now up until you take out 1760. So remember, we're going to have for you the live webinar. That's going to happen this Wednesday, and that in order to get in, you have to go and sign up for it. If you're not on my mailing list, just call 866-973-2077. My staff will take all your information and they'll get you the invite. Is that simple enough? 866-973-2077. Have a good evening.